So what are the customer expectations? Well, you see there, our customer is sitting on a Zoom meeting or whatever other kind of teleconferencing portal or website you use. Our customer is sitting there with the loan officer on a teleconference meeting, the loan officer explaining everything to the customer, right? That's a pretty cool one. Customer expectations are a collection of behaviors that customers anticipate from businesses during each interaction. Now, what are we talking about? Well, speed of delivery. And now these aren't necessarily in order of importance, right? Just threw them out. Just threw them on there. Speed of delivery, quality, value for money. You know, we always talk about adding value at the mortgage calculator. Speed of delivery with our quoting system, right? I could be on the phone with you there while we're talking. I could be sending you 5, 6, 7 quotes in 5 minutes while you're giving me the detail. Quality of the work, of the service, of the product offered. Efficient customer service. Make a little note there of Zoom meetings to explain the documents to the customer as we walk them through a tough procedure. For some customers, a tough procedure is just e-signing their disclosures, right? Some of the more technologically challenged people, hey, you can hop in on a Zoom with them. Knowledge and expertise. That's a given, right? They don't want application takers in this very competitive environment. They want loan consultants that can make them feel at ease, that concierge service to walk them through the process. Now, this one blows my mind. I have to put it on here, but answer the phone. Sounds pretty bizarre, right? If you have your phone number in your communications, be prepared that people will call, and some people definitely want to talk, or at least want you to reply to a text, right? So definitely answer the phone. And last but not least, and this is not in the only points that are valid here, but I just throwing down to the more important one. Reply promptly to emails. For example, at our company, we have an SLA of 2 hours or less to answer that email. So our borrower there is very happy because that's definitely one of our mortgage calculator MLOs that are on that Zoom. Now, here's where we're going to start breaking it down a little bit more. Now, manage customer expectations to ensure customer satisfaction. Now, the ultimate goal here is a stress-free experience for our borrower from the loan application to the approval to the closing. And actually, probably starting with the pre-approval, because the pre-approval is equally as important as closing the deal. Because if your pre-approval is not correct, what's going to happen when the customer is under contract, right? He may no longer be pre-approved once the true structure is put on paper. No two mortgages are the same. Hence, you're going to have to react accordingly to each situation. Now, for our loan officers out there, remember, proper training and education will allow you to stand out as a reliable expert. Because if you see the intertwining thread through a lot of the messaging tonight, it's about trust. Building trust allows you to build rapport, allows you to gain loyalty, allows you to be perceived as an expert, allows you to get the deal and get referrals and have a sustainable loan officer career. Find out what the borrower needs and wants for sure, right? That is in that initial interview phone call that you have when you're going over their scenario. That's when you want to break it down and see what the true objective is. Determine the importance of each of the borrower's expectations. Be transparent in your communication, making sure that you're able to fully explain what is going on. Again, being perceived as the expert is what's going to assist you in successfully closing this transaction. Make sure you provide a consistent experience for your borrower, right? Don't be just too extreme. Either you're like always there or never there. Be consistent. And very importantly here, empower the borrower, seller, and realtor by providing pertinent and accurate data. Wow, that one is probably one of the most important ones that we're going to expand on a little bit further. But notice our MLO there with his superhero outfit, super MLO, making sure that they touch on all of these points. So, breaking it down a little bit more on how to empower your borrower so that the proper expectations are conveyed. I like doing this up front in the process before I even get too deep into the pre approval. I like to pre educate all my borrowers, right? You're going to pre educate the borrower with the knowledge that they need and that they require to make an educated decision on everything that you're proposing to them, so that they can make sure that what you're proposing effectively meets their expectations. This shouldn't be like forcing somebody down, forcing this whole process down somebody's throat. This should be a process of pre-educating the borrower, empowering them. They have all the information they need to make that proper decision. And the decision should come naturally. It is never going to be a forced decision. And believe it or not, as you're going to see with these additional points here, once you empower that borrower and they're able to make a solid decision, compensation is not going to be on the table. In other words, your compensation, they're not going to be looking at ways to cut your comp, because you're worth every penny of what you're making. And we don't overcharge because, compensation is preset. So it's not like we can overcharge for anything here, but it's just the perception that the customer gets that can make or break you getting that deal. Now, what are some of the items, some of the topics that we want to pre-educate and empower our borrower on? Well, appraisal. I mean, how important is that, right? All the different facets of an appraisal, starting, that could affect an appraisal, right? Value, if it's an investment property, rental income, if it's a non-QM property or an FHA purchase as well, seasoning on title, right? Seasoning on title by the seller. If it's a cash out refi, seasoning on title by the borrower. The credit score and the effect that it may have on the rate, right? Now we're talking credit score and then getting into that whole credit simulation possibilities and bumping them up, all these conversations that we have when we're empowering the borrower. Once we talk about these factors, then we also may want to talk about some of the program parameters and how they affect the rate and the cost of the loan. Things like, full doc, or having to go alt doc if we're a self-employed borrower, or alt doc with the CDFI program if we're a primary or second home and we can't go full doc, right? Because the income doesn't qualify, and how that is going to result in a more expensive loan because it's higher risk, right? Higher risk means a higher rate and higher cost of the loan. All of these things that you explain to the borrower, right? It makes everything a lot easier. Adds value to your service. Remember, we want to build the rapport. We want to make sure that they perceive us as providing the maximum value for their money, because this is a transaction that's costing them money. The closing costs are money that they're paying for the services, and they want to get their money's worth. Everybody does. It also is going to lead to a faster borrower decision, right? They're going to know what they should do, not because you're telling them what to do. Many of them will ask you, hey, Jose, what do you think? On which I'm going to break it down based on the data that I provided to them, right? They're going to be happier with the product that was selected, and that's going to result in less of a chance of a fallout, right? That the loan's going to be canceled, or worse yet, that that it's going to be denied. Customers don't want to go through with it, but now it can't happen because for whatever reason. But they're going to be happier, faster borrower decision, happier with the product selected, and makes hurdles and obstacles easier to overcome. Now, what I mean by that is, okay, all of a sudden something came up. One of the things that you had explained to the borrower that may happen with the deal, well, we had an issue, when we saw the value, we knew it was a little high. We knew that we would have to have a plan B in case that we had an issue with the appraisal or whatever it may be. You've discussed these things, and now they're ready to take action because you've covered the possible barriers that could mess up the deal. You're going to have that happier customer who's going to be very appreciative of the work that you're doing. And like I have right there, more appreciation of you and of everything that you're doing equals more referrals in the future, because this is not a one and done business. This is about doing repeat business from the same borrower, referrals from the borrower as well. All of that equates to greater longevity and sustainability and more happiness overall in your mortgage loan originator career. This also works wonders with investors because investors, especially, right, they're savvy. They already have experience in this home buying, home selling, home financing process. So they're really data driven, talking about, everything, all the info that you can provide to them so that they can make the best decision possible, all the different configurations of what they want to do that could get them to the promised land so that they can figure out which is the best option, right? Because at the Mortgage Calculator, we have over 5,000 options, and many of those are non-QM, and especially with our investors. So believe me, empowering your borrower works wonders. And definitely want to be able to automate tasks and processes to allow you to create a more memorable experience and increase your productivity, right? So, and these are the interactions that you're going to have with the borrower as well. That's going to make you appear a more professional individual, more clearly able to communicate the information through the use of items like a CRM, a quoting system, a borrower portal, and to a lesser degree, your MLO website. So a lot of stuff going on here where you're sharing information both actively with the customer throughout the whole process and passively throughout all the additional tools that you have that the borrower may access.